Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Another fun-filled day, and it's the middle of the week to a holiday for us in the States. We celebrate the Memorial Day of World War I, the war to end all wars, on Monday, and markets are closed here in the States from Friday all the way till like Monday evening. But we'll do our webinar. We always do. It's the way we roll around here. I like to have the consistency and continuity. Anyhow, as you can see, the dollar against the Swiss is moving down, and it's been doing that for days now. We have the Swiss itself now. You can see on J4X is way down at the bottom. Same thing over here on Chicago Quant. You can see it's been moving down. It's starting to pop up actually right now. You can see that. And our green line is moving towards the zero line, just like here on J4X. It's trying to turn. And the weekly is drifting down. And it's been one heck of a move from the par area, I guess you could call it, the 100 area. It moved down to the 96.5 area, I guess you could say, something like that. Oh, no, even lower. 96 and lower, 95.74. So it was one big move of four big handles. The stock market with that has firmed. There's talk of the Federal Reserve here in the States kind of losing its interest in trying to raise interest rates. And it is a battle now. We're in the middle of the battle between inflation fighting the Federal Reserve and the quantitative easing. And they don't want to raise rates too much because then it'll upset the rest of what they've been working for since 2008, and that is consistent stability after the crash of the world economy. So I know when I say world economy crashed in 2008, people like scratch their head and they go like, what is he talking about there? And I go, well, Lloyd's in London is out of business now from it. Merrill Lynch is gone as an independent company, and Deutsche Bank is same situation as Citibank. They're all just shells of companies that used to exist. They're using the names, but they are not really the leaders in financial universe anymore. Can you imagine? Lloyd's of London is gone. It's owned by the Exchequer. I have to just repeat that. That was like the Rock of Gibraltar, as far as we were concerned. That insurance exchange slash, I don't know how else you can describe it. It was basically an insurance exchange like the New York Stock Exchange or the London Stock Exchange. It was a pillar, and now it's just owned by the Exchequer and, just kind of limping along like everything else, like the Bank of Scotland, and we can go on and on and on, and we do this all the time, and don't want to get carried away, but it's this fight basically of stability. Right now, there's been a challenge to stability, and besides the war in Europe, the real challenge to stability has been the inflation from the government policies for the last year and a half, 2 years now. Basically, have just exploded the economy since the elections of 2020. Things have just gone, just horrible, and you got this battle going on where the Federal Reserve, the U.S. Federal Reserve, is trying to keep stability, and it's a challenge. It's a very major challenge to keep that stability functional on any level. And what is the magic? Oh, look at that! There's so many people, and I didn't realize it. Hey, Janos. Hey, Robin. Hey, Janet. Let's see. Meaning of S&P. Oh, there, look at it. Got some good questions. Talks on YT Twitter. Cool. We can do all this. Hey, Jordan. Hey, big guy. Hey, look, we got some bodies in here. Yay. Let's look at some of this stuff. Yes, indeed. So today we're just looking at the idea of the inflation. So let's jump over. What was the first one? The first one was, Yana said, Doc, check on the U.S. indices. So let's check them out. And let's see what the U.S. indices are doing. Right there. Oh, let me get rid of that ad there. Click it away. There we are. And we see here, there is the NASDAQ 100 or the Tech 100 right there. It's still in a daily sell for, what's that, 3, 4, 5. This is going on the 6th day. We did have a volatility signal right there. So we might be getting some action soon. You can see the line is fighting. It's fighting to get up. But the weekly is, crushed. Now let's check it out on J4X there. And this is the battle of the inflation. This is exactly what I'm talking about. This battle of the inflation with the quantitative easing, the Federal Reserve, they're scared to raise rates. I think I mentioned it weeks ago. The rates were reflecting a 4% possibility over the next year and a half. And now they're down to 3.5%. And we're seeing bonds rallying. All the fundamentals don't exist anymore. You have to laugh at that. Let's see. Gold is going down. Inflation is going up. I'll say that one more time, real slow. Gold and silver are losing value in price. In other words, they're losing money. And, by being long. And inflation is going up. It's up to 8 and some odd percent. It'll be pretty calm again this month, locked in the 8% area. And then I think it gets heated up again in July and August. You start to see it even expand even more. But yeah, that's what it is all about. And you can see here on J4X the same action. All this weakness in the Tech 100 right there. Let's see what else did Jano say? Oh, the other one was the S&P 500. Let's check that out. There's the S&P 500. As you can see, that's in the daily buy for the last couple of days. It's trying to get going. But again, the weekly is buried way down in here, so it doesn't really matter that much in the sense of the buyers are still dragging their feet. It's the classic, went into the sell this week here, and it's just been drifting down ever since. We go into our daily buy or a daily sell here, daily buy and then daily sell, that type of thing. That's what these lines represent. It's when the green line and the histogram are plus, and when they go minus, like right here, that's the sell signal. And we always recommend here with our technical analysis is that when we're in a weekly sell, you only want to trade the sell side. If you're trying to play with these little bounces, do it through binaries or options or something like that. But with that strength, the overall trend, our weekly is very powerful. It's a very successful signal. Like the rest of our work, it's 8.5 out of 10 times, if not more, right over the last half a century. So it's not really worth fighting. If you want to fight it, just send me the money instead. All right. Let's see. That did those two. Let's see. What was the next one? Oh, yes. Let's check this out. We've got some people talking today. I love it. Meaning S&P and NASDAQ. Yep, exactly. Robin says hi again. Let's see. Talk on YT and Twitter as of a recovery in the summer. YT. Yield? What's YT? Tell me what YT is. Twitter. Let's see if we can put Twitter up there. What I understand what's going on with Twitter is Twitter is not. I think that's going to transact in this area. That's what I think is going on there. Let's see if we can put that stock up on the screen here for you. But it doesn't really. It doesn't look like it's going to execute in the 54 area. It looks like it's probably going to execute in the 30s area. They're having problems with confirming that they actually have any clientele. It's kind of scary. They're saying that it's almost 50% missing. In other words, they're all robots. And in some aspects, they say sometimes in a particular subject on Twitter could be as much as 90% robots. So in other words, it's when you think it's 100 people talking, it's only like 10 people talking. And the others is just fake accounts or robots dealing with it. Now let's go find. There's Kathy Wood's thing for you fans that trade the ATAI. We've been in the weekly sell on that. You can see since up here in the 5.5. Is that the 525 area? And the poor little stock has fallen down to $3 since then. It's trying to bounce a little bit there. That's kind of cool. But let's go find Twitter. Let's see if we have Twitter on here. Do we have Twitter? I don't see Twitter. So let's do this. Let's put Twitter in. Let's see. There's Uber. There's that. That's the the Brazilian one, which is anybody that follows Brazil. Let's see. There's Q's. There's the DAX. Let's see. We're gonna have to. I'll put it down in here somewhere. Let's go down. Ford Motor Company. There's another good one. That's been in a weekly sell since the $16.50, $17 area on a weekly sell. It just refuses to come out of it. It's going down to $12. So that's a pretty good move too. But let's do this. All right, we're going to add one more. Let's copy that. I don't want to get rid of Ford. Paste. And let's put Twitter in there. Well, and what is YT? I want to know what YT is. Is that the Treasury? We have the Treasury. We can show you the Treasury. Format. Let's see. Stock, instrument, Twitter. TW. You know, I don't even know what Twitter's symbol is. Let me go find Twitter's symbol. If anybody knows it, just throw it up on the chat line. Twitter. I just noted what I'm hearing is that it's not going to transact in the 40s or the 50s. It's going to transact in the 30s. So Mr. Musk is going to pay like half of TWTR. There we are. TWTR. Add. Stock. TWTR. Look up. There we are. And so yeah, that's probably the way to go there. So is it safe to buy here? You know, it's hard to say. I mean, it's in the 30s last I heard. I didn't seen it this morning. But there you go. There's Twitter there. TWTR. There's that. All right. So Twitter's been in a weekly sell since almost the $50 area. Right there. See, it wasn't a buy there. Yeah, you can see it went into the buy back in here, and then it went up from the 36 area. And now we're back down in that 36 area, and let's throw some dailies in there. Oh, we got some dailies we can play with. So there's it went into a sell yesterday. There's a buy right there. Let's move that over to there. There's another sell. Let's put that in like so. Oop. Yeah, so that's the story on Twitter. You know, don't be too brave yet. If you're going to do anything, buy 3-month calls or 5-month calls or something like that. 5-month binaries would be really great. You know, more than likely you're going to get a win out of that. Let's see. There's a sell again right there. There's a buy again right there. Oh, wait a minute. No. That can be moved over to here because that kept the buy. And then it went into the sell. Where'd it go into the sell? Did it go into sell? No, it was in the buy there. So the sell was right there. That's where the sell was because we have a red and a green there. Let's move this over. That goes there. That goes there. And then let's see if we can get you another green here. Where's that? Oh, it could stay there, couldn't it? And that's the sell. And then that's a buy, which lasted like one day. And it was a winner the next day, of course, but it went into a sell then. All right, now we're going to give it a little spin, and you'll be able to see it better. There we go. And widen it out. And let's see, these guys don't belong there. That turns into a green. It must be where Elon told him to buy. And let's see. I guess that's about it. That's the way it rolls. You couldn't take the short here because of that. You just could take your profit and nothing else but that. There was the buy there. You could take the buy there, and then it went into the weekly sell over in here. You could take the short in here and ride that, but then it gave a buy signal. You couldn't take that, but you could take the short, which was right here. So you were flat to there, and then short again, and all the way down for that wonderful little ride there from 50-ish to 35-ish. And that is Twitter. Let's save that because in case anybody wants to see that like tomorrow or 10 minutes from now or something like that, we'll go back to it. Let's see, save as. There we go. There's the Twitter. All right, let's go back to the chat line and see what else is going on there. So yes, is YT a yield? Is that like the 10-year maybe? Let's see. Let's go through this now. Math confirms the talk. Buyers are not showing yet. Yeah, that's the way it's going. They need a spark of some sort of get in. It appears that the markets are waiting for a couple of thin things. Yes. NVDA earnings, FOMC meeting minutes. Yes, exactly. Oh, let's see. I think we have a NVDA, don't we? Didn't someone ask about that? I'm not sure. If you want to see that, I can throw it up. And Thursday's U.S. preliminary GDP. YT is short for YouTube. There's a stock, YouTube? I didn't realize that. I thought it was owned by Google. Let's see. I thought YouTube was Google. Let me just double check. I'm confused. You got me confused now. YOU, YouTube. Yeah, YouTube is not a it's a private company now. It's owned by the guys at Google. So there's no stock in that anymore. Let's see. Why should Musk overpay? Exactly. He's not going to either. Take a look at Euro. Oh, yeah. Let's check out. Okay, we'll go over to the currencies now. Cool. Currency. Whee! We love answering questions. We like looking at products. Yeah, look at that. That was nice. We'd been in a buy for a couple days there. And it's just trying to break down a little bit. I don't know if that's anything meaningful. We would love to see this thing. It's been in a weekly sell since the 140.14 or 115 area. 115.95? Yeah, so I mean, it went all the way down to like 103 and change. And we'd love to see this thing get back into the weekly buy on the euro. Let's show it to you on J4X there. And traders out there, anybody that has an idea they would like to see a particular product, just sing it out. You don't have to ask a question. Just throw the symbol up on the chat line, and I'll do the rest. Yeah, it's under Google. Do you want to see Google? I can show you Google. Let's see. Take a look at Euro. Okay. Almost everyone on Dukascopy has positions on that one, judging by the volume. Oh, on the Euro? Yeah, Euro, definitely. Janet says, question mark, yeah, Euro. I meant that guys talk on YouTube and Twitter and the market indices. What, on the Euro? Are they really yakking away about the Euro, or they're yakking away about Google? Let's go check out Google. I know I have Google on one of my screens here. Save workspace. Oh, no, that's not it. Let's go back to the stock one. That's it. Let's close that for a second and open up another one. Let's show you Google. As my mother would say when she was like in her 90s, she'd go, Google Gaga. That's what she used to call Google. Google Gaga. She didn't. I said to her, no, that's a mathematical thing. She'd go, really? I said, yeah. A Google is enormous. You know, it's you go like millions, billions, trillions. You know, it's a quad somethings, and then there's a Google. It's an actual mathematical increment. In other words, there could be a Google millionaire in size someday. I mean, that's what that's all about. All right, there's Tesla. Let's go to Google. There's Google. And let's see, last time we updated this thing is a while. There it is right there. We put it on our sheets every day. And let's do that. It's been in the sell since the $2,600 area. It went down to the 2,000 area. Let's see, the daily sell. Look at that. When it was in a sell there throughout that whole ride from the 2,800 area, and didn't get back into a buy until there. There's the buy. And that lasted about, I don't know, 4 or 5 days or something like that, and went up about $150, $175. And then back in the sell again. And then Not there, but there. Went back into a buy for a couple of days, but you're in a weekly sell, so why would you want to buy it? And then it goes back in the sell again, right there from the $2,237.99. Sounds like a bargain. And how everybody it's for sale for 5.99 euros, and then it fell from there. Where was that? It fell from 237, almost 238. It fell down to 237. What was that number again? 237.98. It dropped almost exactly $200. Isn't that funny? Ha ha. No, it went down to $2,100. There it is. No, the low was $2,037.69. So it dropped almost $201 or $202 on that little sell-off there, which bought you a lot of chicken dinners, that's for sure. All right, so here's the Google, and it's in the sell, and it's saying that there's not a lot of love for it. Not a lot of love. It went into the weekly buy there. That was a pretty good one, and it went into the daily buy there. There's the last daily buy or the weekly buy right there. And then there's the daily buy right there. Let's let it go all the way up. Make that line go all the way up. There we are. Yeah, so it went into the daily buy there, and it went from, it went from $2,662.99 to $262 to $2,875, up over $200 in that 5-day period. That's pretty cool. And then it tried to tell you to take your money and run right there. Take your money and run. And you know what? It never went into a buy again. And that's where it went into the sell. Went into the daily sell right there. Because you got those, there it is right there. Because you've got the red and green there. And you got a red and green there. Another red and green. So it goes into the sell and doesn't go back into a buy until like $600 later. And in between there, it goes into the weekly sell up in here. And then smackaroo. How's that, Janos? There's a Google. I think it's 12 zeros, isn't it? 12 zeros? I forget what a Google is. Let me take a look and see. I don't usually hear that. I hear that when I'm doing physics, it's in there. I don't really pay attention because then you just go to powers at that point. Let's see. No, a Google is a large number. It's 10 to 100th power. That's what it is. In a decimal notation, it is written as the digital 1 followed by 100 zeros. That's what it is. That's a Google. You once in a while, if you're dealing with cosmology, you hear it out there. It's. I try not to take it too serious since I'm not a Big Bang person, and I'm against. Matter of fact, I just posted something in cosmology this morning about NC. Let me just show it to you because now that we got into Google, where's it at? And I'll really make his own nuts. Let's see. I'm just going to show you the picture of it, and then we're going to go on back to math, of course, or science, or whatever. There it is. There it is. Let's move that over to that page. A tale of caution. The tails of NGC 752 are much longer than claimed. Actually, they're 4 times longer. It just shows how much, now I'm talking, so I'm getting rid of it. It's gone. Don't worry. Doc's not going to go into physics and cosmology, but the math shows that it's 4 times larger than these mainstream characters in cosmology think it is, and that's where you end up seeing the increment of a Google, 100 zeros. I know it's some crazy thing, and so let's see. Jordan says Euro Yen 5-minute chart. Think might see another run up or so. Let's take a look at it. Also, let me go back to Janos's last parts. We're going to go. Let me load that in, and I'll go read Janos's stuff. Let's see, and let me do this. We'll close that. Let me save that too. Save in case anybody asks again. Save as. Yes. Yes. And let's close it. There we are. Now let's go find a 5-minute Euro Yen. Usually for Jordan, we're usually doing like dollar yen. I think don't we? Yeah, there it is, dollar yen. We usually do that. So let's do the activation of that. Copy, so that we can do 2 of these. In case Jordan goes, hey, let's take a look at the Euro Yen too. It's like, oh, okay, yeah. All right, so there is that. Let's put it in there. The Euro Yen. I think it's set on 5 minutes too, isn't it? Yeah, it is. EUR. There it is. Click the doodah. And there it is, Jordan. Now let me go read for a second, then we'll go reanalyze it. But at least you can see it trading live. That's a live. That should be a live thing there. It's exactly a live thing. All right. So then we did the Google, and we did the let's see. Yeah, we did the Google. Okay, FOMC. Yeah, he spoke yesterday. You know, they're saying that he grew hair on his chest, and yesterday somehow or another he shaved it off or something. I mean, it's really bad. That's why my title today of this webinar is Inflation Fighting QE Fed. I mean, really, it's a real battle going on there. Stability, and, you know, he's getting nervous. He's thinking about now the money is starting to project that we're not even going to see 4% interest rates. So we're now down to 3.5%. And you can see, you know, after we go through that, let me just see what you said. I mean, the guys talk about YouTube, Twitter. Okay, YouTube is under Google. Yeah, that jack away about inflation rates and market being oversold. 8 weeks of blood, red. Yeah, isn't that a hoot? And then you're okay. Good. All right. So, yeah, can you believe that, Janos? They've never had 9 weeks of the Dow Jones Industrial Average in a minus ever in history. It shows you that somebody at the Fed wasn't paying attention, you know, to allow that to happen. So, because they are the buyers of last resort. So, I mean, you know, they should have, like at 7 weeks or 6, they should have popped it up. No one told them that that was going to be a historical thing. During the crash of 1929, you know, the Great Depression, never did they have 9 weeks of the Dow in sell. And the S&P 500 is doing the same thing. It's like 7 weeks now, or 8 weeks, or something like that. It's never seen anything beyond. If it closes in a weekly sell this week, it'll be the first time in history it's ever seen that. All right, now, Jordan, this thing is kind of slow moving, isn't it? Nowhere near like. Let's check out the dollar yen one of yours that you like to look at. Compare just back and forth a little bit. It's much more active. No, not that active. It looks kind of dead there too. I can see the tick's ticking away. It's ticking. And you can see here. But let's go back to that Euro Yen 5 minute again. So let's widen it out like so. Went into the buy right here. Let's put a line in there and we'll just move the line around. So it went into the sell there. Let's make it fattish. We'll make it like a yellow or something like that so you can see it. There we are. And we'll make it run all the way up and down. Okay, so there it is. It goes into the sell there. Goes into the buy. This is what, 5-6 hours ago. It goes into the buy right there. Wasn't much of a rally. Goes into a sell right there. Wasn't much of a sell-off. Goes into a buy, not there, right there. Goes into buy right there, not much of a lift, just a couple of bips up. Goes into a sell, right there. Does go down for a while. And goes back into the buy right there. It goes almost nowhere. Goes into the sell right there, is it? No, right there. There's the sell. So you see that's the red dot. But the green line is above the 0 line. See the same math, same statistical average. We've talked about that. We have a webinar that says something about that just recently in the last couple of weeks about the idea that if your intraday doesn't match up to your daily and weeklies, you got everything wrong. They have to move together. And that was a good sell. The sells seem to be better in this. Notice that? Like even right there. It's in a sell all the way to right there. So it went into a sell here. Let's see if we can generate one of these things. Where is it at? It went into the sell right there. And it didn't go into a buy until there. That whole ride down. So it seems like the sells are much better on this product. How's that, Jordan? Does that make any sense to you? What did you say? You think might see another run to the upside? Sure, every time we get a buy signal, it goes up 3 or 4 pips, and then it goes down like 10 or 15 or 20 down pips. Seems like right now, today, the trade is the downside. Play the short side, not the long side. Look at our math. We'll do it again for you really, really quick. So it goes into a sell right there, and then when it goes into the buys, it goes nowhere. It goes into a sell right there, does better than the buy was, not much. Goes in the buy right there, goes almost nowhere again, just up a little bit. Goes in the sell right there. It goes all the way, it's a half decent little sell right to there. And then the buy again is rubbish, and it goes into a sell right there. It was, the whole move has been down again like that. Let's move this thing over to here. Then it goes into a buy again. It has no love for the upside today at all. Every buy is just a few pips and it falls over again. So it's the sell side is the side to be on. Yeah, so the sell has been the big winner. It's been the chicken winner dinner. Oh, what Giannis says. Giannis says, interesting here. Let's see. I raised a theory that there should be no more bull runs because compared to prior bear markets, the retail sector is too informed. That's an interesting thought. The bull and bear markets is the Federal Reserve at this point. In other words, it used to be the New York Stock Exchange Specialist Unit, right? And then Robin and I were having this conversation a couple of days ago. And then they would basically kind of instigate the funds and the institutions to do things. And they were the buyer of last resort. But they're gone now. They don't exist anymore. And so, it's the central banks now are the buyers of last resort. They run the markets now. All the central banks and QE run that's what QE does. It's a quantitative, what is it? QE is quantitative easing. So what they do is they ease when they want stability. The objective of it all, when you read everything Bernanke, who invented it, they want stability. That's what it's all about. They don't want a lot of volatility up or down. And so they're trying to put confidence into the marketplace. So if that article doesn't say anything about quantitative easing and central banks, they're hiding data because they're the ones that do it all. As in no sudden over recoveries of 11, 12, 20% in 2008. Well, they just like to be slow and consistent. I agree with that. But there are already too many theories. Yeah, well, I don't think there's much in the theory, though, really. I think that we're being generous by calling it that. I think what it really comes down to is central banks run the world. And they always did, but they did it on a quarterly basis, not on a 5-minute basis. They would do it over a 3-month period. They would add reserves to the banking system, which then would lend money to borrowers. Or they would take cash out of the banking system and tighten the capital in the market, in the free market, and so that borrowers couldn't borrow to generate businesses and grow. Okay, and then it came down to the individual bank and how they decided risk. Okay, now the Federal Reserve runs the risk at the banks, and they have to do what the Federal Reserve says. And the Federal Reserve lends the money overnight, so like from Citadel, the hedge fund, all the way down to Citibank, the bankrupt old Fortune 500, who trades still at bankrupt prices. You know, basically has to listen to the Fed to a great extent. When a bank lends money, it has to lend that money the way the Fed says it's allowed to, and no other way. So to call it a theory would kind of make it independently sounding, you know what I mean? It's not really independent anymore. It's all, and that's why today, why I call this particular webinar, Inflation Fighting the QE Fed, because they're at war with each other. Bad policies of government generate inflation. Too much capital, too much cash around, going after too few of goods needed. People want something, and there's 10 of them, and there's 50 people who want it, and they have the cash to go after it, and what happens? Price rises on what it is, and vice versa. Let's see now. Anything else out there? I hope I've answered all the questions. Have I answered everybody's questions? Oh, wait a minute. I don't know. Yeah, I think I have, haven't I? All right, good. I hope I've gotten everybody. I think I have. Is that Ilium Ergun? Did I answer? I don't see anything out there on the question. That's all right. We'll just say hi. That's good. That works. And who else? Did we miss anybody? Janet X, we just said hi. I don't think Janet asked for anything. So, oh yeah, Euro. I showed her Europe, and Giannis reminded me to go look at the Euro. Yeah, and we looked at the Euro, and we can look at it again. Did I hope I answered you, Janet XT. Let's see. We have lots of fun here. Doc loves to look at new things or other products than the ones we always stare at. Because, I mean, we all... You know what? Anybody who watches this webinar every day should be able to make a lot of money. Because, I mean, we show you the math every morning, and you can see the longer-term trend. And if you use options or binaries, combined it with this math, you're going to make a lot of money. All right. Let's see. 54, where you been? We've been having lots of fun. Did you see the Google? We did Google. We did Twitter. We did, what else did we do? We did Euro Yen in a 5-minute. That's pretty cool. Jordan brought that one up. Let's see. 54 says, most commodities have gone down by 50% except corn. And no. I mean, let's go. We can check them out. When Fed members were forbidden to buy or sell stocks except with a 6-month notice, suddenly they do not care about the stock market anymore. Absolutely great job, Jock. Well, corn is off. Like, I don't know, what is it? Let's close one of these and go find corn. There we go. Corn is only down like about 20 cents or something like that, compared to, I mean, it's up in the $7 area still. Even it went into a weekly sell last week too. Here it comes. Here it comes. There is July corn. Let's do the other July corn. That is for somebody who's colorblind. We have that up there for them. It went into... No, it didn't. Corn didn't... that's July beans. Where's July corn? There's July corn. There we go. It went into a sell up in here in the $8 area. Right? So it was much lower. It was like $7.81. And then it's fallen down to $7.57. $7.56 is a low. And we're in a weekly sell here. Now, these are like, that's the highs, $8.15. So, I mean, I can't complain. When you think about a product that no more than a year ago was trading at, I don't know, what was it? This time last year in 21, it was trading in the $5 area. 5 to 5.5 area. Got up to $8. And in February of that same year, it was trading at $4. Okay? And it started off in January in the low fours, in the high threes in December. It was at $3 and change right there, isn't it? Isn't that three? No, it's 410. Okay, so I don't see 50% off of 50% off of 816 would put us back down again on corn. So that's why I went like, no, not 50%. Oh, except corn. Oh, you were right. You're right. Except corn. Well, let's see. Beans are not down that much. Wheat is not down. Here's wheat. Wheat ran up to $13 again just a few weeks ago. A week and a half ago. And back in January, is it right there? It's 2021. We want to go to January of 2021, even if we're just looking year to year. I mean, we looked at, there's wheat in December of this, I guess it would be March. Where are we at? We're in June. We're in May. All right, so we're in May. So wheat was in the $5-6 area. And it got up to 13. It's not back down to $5 or $6 now. It's trading at $11.25 now. So wheat's not down like that, and beans are not down like that either. What other commodities are you thinking of? Gold is not down 50%, but you know what? Silver is. Let's take a look at silver as a commodity. Silver's down probably 50%. Here's silver. There it is there. There's July silver. So July of last year. There's July of last year. It was at 26. It was up as high as 28. And now we're down at, so 50% of that. We'll give you 26. How's that sound? So 26, that'd be $13, right? So there's 50%. It's at $21 or $20. So it's off what? It's off about 25%. Is that about right? $26 down to $20. So it's about 20%, right? Steel. Okay, let's see. I'm saying most commodities are down big except corn, but and wheat and soybeans and cattle, and you know all the foodstuffs are doing fine. We got farmers that trying to tell us at $4 we'll never see $4 oats. Robin's probably laughing at that one. I hope they're not watching. And let me just show you oats. We had farmers trying to tell us when it was at $3, it can't get past $4 again. It ain't going there. It ain't going there. They're telling us over and over. It's not going there. It went to $8 again there just back in April. You know, and it went from last time in let's see, there's March of last year. Actually, no. Here you go. In June of last year, oats were trading in the $3 area, and they've gone all the way up to $7, backed off a little bit, and went to $8. So, yeah, steel. I have a friend. He has a manufacturing operation. I've had him buying metal, like he uses aluminum, and it hasn't really gained much. I had him pick up about $100,000 worth of extra aluminum, and he's probably up 10% from it because I had him do it over a year ago now, and aluminum's gone up a little bit, but it hasn't really gone up much. None of the metals are really. You're right. None of the industrial metals are really going anywhere, which is kind of odd. I guess because the economy's not growing. What do you think, 54? Is it because of that, you think, or what? I mean, he's doing about the same sales as he did last year. A little behind, about the same. But, like steel and... Is steel down 50%? Really? Wow, that's biggie. Too bad there's not a steel contract on the exchanges that we can follow. The closest we get is, what's the one Janos was talking about that they do on palladium? But even then, that's kind of precious metal, really. Platinum, precious metal. I guess copper, right? Copper is probably the closest thing as an industrial metal that we follow. Let's take a look at copper. I hope we're not too deep into the weeds for everybody. Let's see. Copper. I will change the subject in a heartbeat if anybody wants to hear or see anything. Just throw anything out there on the chat line. APPL or something. Anything. We'll take a look at it. Don't be concerned. We're willing to stop and jump. I'm just responding to this because no one else is asking a question. July copper. It ran up to what? Almost $5, and now it's traded close to 4 and change. So that's a 20% drop. So I guess that's what that is, a 20% drop, right? So copper has felt a 20% move, like, in many ways when you really think about it, copper and silver both have had like a 20% drop from their highs of this year. And no urgency in raising rates that quick unless the Fed wants to hurt the stock. Right. Yeah, exactly. And that's what they're doing. And that's why the stock market's trying to firm up. Matter of fact, it was up, I think. Is it down again? Let's take a look at the stock market again. Because it's exactly it. They want that stability. Let's see. Let's go to the intraday. Where is it at? Right. Let's do this. We'll close. I'll close that for a moment. Okay, here it is. So you can see here the S&P is down 15. The Dow is down 130 now. It was plus earlier this morning before I went out to the farm, down to the farm to do some stuff. Here's the Dow Jones Industrial Average. Well, you know what? I need to add another day to it. Yeah. Let's change that color a little bit too, like that. There you go. You can see it better. And so that's the Dow Jones Industrial Average, which is down 133 right now, and that's trading at what, 30,107. That's basically 740. And up in here, what was that at the London Open? It was trading at 32,020. 32,000. It's down 250 points. So it was up. It was actually up 150 points at the London Open this morning. Here's the S&P 500 ticking away. Went into a sell right here. And this is ticking away hot and heavy, trying to lift up. We'll see. Yeah, I don't see. The numbers are reflecting. Traders, institutions are saying that interest rates may not get past 3.5 to 4, and now they were projecting 4, and they've moved in the last couple days down to 3.5. And I think I went into a weekly buy. Wait a minute. Now that we're talking about this, I think we went into a weekly buy in the 30-year. No, that's not it. Here it is, right here. It's right in front of us. That's the 30-year. Yeah, we closed in a weekly buy last week in the 30-year bond. So when the price goes up, interest rates drop. Now, it was in a daily buy with that for just a little period of time, then went into a sell. They're a little confused. They're not sure what to do about that. And the 10-year is doing the same thing. I think it went into a weekly buy too. No, it didn't get into. The 10-year did not. The back month did. The older date did. But it's doing it now. It's through the weekly with no problem right there. This is the 10-year bond. And it's in the daily buy from yesterday. And so the same thing with the 30-year. 30-year is the same way. It's in a daily buy for a day now. It looked like it had gone into a buy the day before, but it didn't. It slid into a sell. And I guess they were anticipating. He spoke yesterday right here. That day he spoke. There they were a little concerned of what he was going to say. Or as we used to say on the New York Stock Exchange, as an old member of the old exchange, we used to say, you got to take them down so you can take them up. That was the classic concept of it all. All right. I hope I've answered everybody today. Today was kind of a shoot from the hip type of day, you know. It was kind of good. Giannis got us into some interesting stuff. Jordan did too, and so did 54. And it was nice to see a couple other people jump in and just say hi. So this is good stuff, you know. Now, from there, but this shows you right there with the interest rates. The interest rates are trying to get going. The back month, the 30-year U.S. Treasury bond had jumped into a weekly buy last week, and that's why we follow the 30-year more than we pay attention to the 10-year. Because, you know, back months, bond investors are much more sophisticated than any of the others. That's why the bond market is still the most dynamic market in the world. And then you go to currencies. Currencies are number 2. And an oil market is number 3. And stock market's like number 7 down below when it comes to the sheer size of and volume. That's what we're talking about. The size and volume. The number one marketplace in the world are bonds and bills, you know, interest rate products. And the second largest thing are currencies. And then from currencies, it goes to the oil contract. And from the oil contract, it goes to the stock market. So, and then that's the actual sheer size of it all. All right. From there, let's go back. If anybody cares, we can go back and look at a few of the other products. Or, like I said, if you have a desire to see something, just shout it out. And that's the answer to the whole thing there. All right, let's go. Where did we leave off? Euros, right? So let's look at cable. Ooh, 54 says, Fed should pause rate right now and wait to see. I hear you. That's what they were saying. Some of the insiders in bonds, you know. I have one or two friends that are still involved in that. They're like in their 70s and 80s. And they said, you know, Powell had grown the hair on his chest over the last month and a half. And they said, I think he shaved it off yesterday. So obviously, I wasn't paying attention that much to it. But I did notice, you know, I was, you know, already, you can see on the screen, I already knew that there was something going in the wrong direction when it came to interest rate increases. The 30-year had gone into a weekly buy last week. So I was like, okay, yeah, rates are going to go down. So I was already there, you know. And so I was I just laughed and I sent my chart back over to him and I said, yeah, right. I mean, that's why the 30-year went into the weekly buy last week. And he goes, yeah, how did your chart know that he was going to shave his hair off his chest? In other words, he's not being aggressive anymore. He's not being a man, you know. And so that was the, you know, when you get an 80 some odd year old trader from the floor, you're going to get that type of. You're not. It's not going to be a woke conversation. It's not going to be a what's the word I'm looking for? It's not going to be a conversation that you can have in mixed company. Let's put it that way. So yeah, that's what's going on here. I mean, they can't hurt the market too much. They can only let it go down so much. That's what their job is right now. This is what they are. That's what quantitative easing is all about. And they call it QT at times. That's how cute, isn't it? Instead of calling it quantitative easing, they call it QE. But more than that is they barely even they won't even reference it as QE. But what they do when they want to say that the Fed is going to tighten, they call it QT, like in Titan or time or tool or two. You know, QT. So they're saying QT might be drifting a little bit. Hey, MHB, what are you up to? I hope we're not driving you too crazy. We're just being me, you know. And that's pretty much what it really comes down to. Is I hope everything's good. Care to see anything? We got about a minute or two. We got a couple of minutes we could do. New York doesn't open up for another 3.5 minutes, 4 minutes, something like that. So, care to see anything? I was going to run over to cable. I hadn't seen the cable yet. See what the cable's doing. You know what I want to also see? I want to see what the euro against the Turkish Lira is doing too. There's cable. Cable's still in that buy for a bunch of days. The weekly's trying to turn up. That's kind of cool. Let's see what the euro Turkish Lira looks like. Uh-oh! Something's big time wrong there. I don't think he's paying his puts. Something's wrong. Those free puts are, they're going to get expensive now. GBP, yeah. Dollar index? Sure, let's check out dollar index. There it is on J4X. And let's see what it looks like over here on our work. Right there. There it is. Dollar is doing the same thing, like, looking at the Swiss and everybody else. It's been moving down in daily sell. A lot of pressure on it. Weekly's still in a buy, though. That's kind of interesting. And let's see what it says for the weekly over here on J4X. It's trying to roll over. It's getting a red this week. Yeah, so we're getting pressure in all kinds of directions when it comes to the dollar index. There's a cable on J4X too, right there. Turkey can run out of money to keep popping up or something like that. Well, they're giving free puts out to buyers. And what's confusing me is something's gone wrong with that over the last week and a half, 2 weeks. We see the, let's go back to it on Doc's work here. And we'll show it to you on J4X too. But something's gone wrong. It's, look at that there. They've stepped out of the range pretty dramatically. Look at that. Way up in there now. It's past the little, the yellow dots. Something's wrong there. It was very happy. They created, this is what that big slam was. They announced that they were going to give everybody free puts who bought the currency. And so it kind of stabilized and went real quiet. And I thought they'd finally resolved their issues. But maybe they're not paying up. Maybe Aragon is saying, hey, I don't think I want to give you the money for it. Because remember, the government's doing it. So something's wrong there. And I don't see any stories yet. So sooner or later, someone's going to come out and say, they didn't give us our money for our puts when I wanted to get out. And then that's going to explain why our math turned up. We've been in a daily buy since down in here. There, right there, you can see that. We went into the weekly buy last week and this, and now we're really jumping. Ever since we jumped into the weekly buy on the euro. Then when you go and look at it on the dollar side of it, dollar euro, someone said in the webinar yesterday that maybe Biden is trying to punish them or something. But it's not jumping on the dollar like it is with the euro, which seems odd, So, I mean, it's been in a weekly buy since back in here. Well, that whole move is a weekly buy. So they won't even give up on it. All right. I'm glad MHB. Very cool. All right, traders, we're out of here. The market opens for me in about another 30 seconds. So this is Doc from North America. Tomorrow is Thursday. Catch you all. Same time, same channel. Happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. Doc, over and out.